We also have Amazon in focus. Shares of Amazon trading after hours popping. We've got their earnings coming in now. Brad Smith joins us with the numbers.
Hey, yeah, thanks so much. As you're seeing in extended hours right now, we're seeing Amazon react positively, shares of Amazon reacting positively to the earnings. It was a beat on top and bottom lines here. The expectation was for EPS to come in at 21 cents a share, came in at 31 cents a share. Revenue, that was expected to come in at $124.7 billion roughly, came in at $127.4 billion. So that up year over year. And then additionally, going through some of the individual lines for Amazon's or segment for Amazon, AWS, a lot of investors going to zero in on that. That is a $20 billion business. It actually saw sales of $21.4 billion here. And ultimately, that is a beat on what the analysts were expecting as well. Bloomberg consensus estimates looking for $21.03 billion during the quarter. So a beat there on AWS as well. They also gave a shout out to their advertising business, saying that that continues to deliver robust growth due to some of their ongoing machine learning investments. For all of those that were keeping artificial intelligence on your bingo card board for Amazon here during this earnings, you got that. They said that they're more easily leveraging language technologies, large language models, and generative AI with their uniquely cost-effective machine learning chips. Tranium, we're going to learn more about these chip names. There have been some interesting ones over the course of this season. Tranium and Iferentia. We're going to, these, all right, I'm not even going to go down that rabbit hole. Managing large language models, Bedrock, and of course, Code Whisperer, rather. So all those names aside, beat on top and bottom line. Sales guidance also beat there as well. Continuing to scroll through here, I'm on my itty bitty phone, even though it is a plus. We'll get behind that later on Pro model. But at the end of the day, the Prime members are one thing that I'm still sifting through here for. And in addition, we already got the mentions of generative AI, but on those Prime members specifically, they were looking for about 248.87 million to be that kind of overall figure now, which would be a net add of 4.6 million was expected. So really just looking through to see if I can find that number while we're here discussing Amazon. But as you're seeing, the reaction right now, very positive for AMZN, delivering positively on earnings right now.
Looking to see what the growth rate is for AWS, because Azure, 27% growth rate, Google, 28%. So can they keep up is the question.
I've actually got that figure for you.
Great.
So even at the figure that was expected by the street, it would have been a 13% growth rate for AWS, but it came in just slightly above that. So $21.03 billion was expected. 21.4 is where it came in at. So just above that growth rate that was expected by the street overall. And ad services was expected to grow by about 17% too in this quarter.
Yeah, and Brad, I'm also looking at the employment numbers here. Employment dropping by 10%. And I bring this up because that means that Amazon's total employment is right around 1.47 million. A drop like that is actually more than what Amazon has announced with its corporate cuts. So that means that some of the warehouse workers have been laid off, which is typical in terms of what Amazon does in the first quarter. But really that points to the cost-cutting measures that Amazon has been taking and will likely continue to take over the coming months here. But that sign, the drop there of just about 10%, that is a sign that some of their cost-cutting efforts are under control right now.
Expect to hear more about that. I mean, this is now context on that number. You said 1.4 something million. They were
7 million is total.
They were around 800,000 pre-COVID. 800,000 ramped all the way up to 1.6 and are now trimming their way back down. They did announce earlier a few cuts, very small though, Shauna, 100 positions in the Amazon Studios and Prime Video units, which is only surprising because they are ramping up content spend in both of those units.